Welcome back, guys, to another weekly webinar breakdown. Before we get into the key highlights, I just wanted to let you know that we just recently hit 40,000 followers on Instagram. The growth has been insane these past 18 months, and I can't thank you all enough for your support. With that, I've decided to discount my services by 40% for the next 40 hours. All the information, guys, will be in the description box down below, so if you guys are interested, definitely head to my website for more information. Thank you guys again for all the support. And with that, enjoy the breakdown. So guys, just to explain one last time what I'm going to be doing, I'm going to be breaking down the next $6 pairs from monthly all the way down to the 4-hour, 2-hour, and 1-hour time frames to be looking at how we could execute entries and exits for the next 24 to 72 hours. And so with that, guys, I hope you guys enjoy this, and then from there we will get into the questions and answers. And so starting right off, guys, we can see on the monthly time frame on euro dollar, we can see rejection occurring around the 115 116 handle, which makes sense because in the past we did see that this was a very strong area from the bearish side. This was a 3-year range of resistance, and so once we did break above, new bullish pending orders are going to be sitting there. And so it does make sense why structure is decelerating or exhausting off of that previous 3-year resistance. Now, taking a look at it from a weekly time frame perspective, we can see a couple of scenarios that can play out from either the bullish or bearish stance. Now, what we were stating last week was if we fail to break below the 115 handle, we could expect some type of pullback or liquidation after this initial impulse, which is what we are expecting as of right now. There was a tremendous amount of pending data that came out last week, and we failed to break that low. And so with that, we are expecting a long state of correction or liquidation to occur before the major drop back down. The question is, are we going to get to this previous 119, 120 area in which the left shoulder of this head and shoulders pattern formed, and this, the 115, 116 being the neckline to break? Or are we going to leg one more time to the weekly descending trend, creating a structural retest of the low we broke in to see continuations back down to the 114, 115, and potentially even lower, all the way down to potentially fill that French presidential election gap? And so we will wait and see a lot of plausible scenarios. Now, one thing to factor in is that the only way the bearish momentum becomes invalidated is if and only if you saw a strong enough crack above the 121, 122 handle, stating that breakout was false. Pulling it to the daily time frame, what can we see here? We can see structure is decelerating and exhausting off of that 115, 116 area. We can see that false breaks did occur in the past. That was a bad drawing, guys. Let me redo it. We can see here that there were false breaks in the past, right, which we did expect to occur in the current state, right? You can see here the past false breaks. We do see false breaks here once again. Does make sense. Why? So looking at it as of right now, we did create a strong base. At the same time, we are creating what we expect to be a long state of liquidation or correction. Now, within that, guys, you do want to look at a couple of key areas within the daily. That is your first trend or impulse that occurred, in which that was, that 119.50, that 120 area, that was the first lower high to be created from the daily perspective. Then we do see a second impulse or trend being formed. Hence, this 118, 118.50 is the second lower high to be created on this trend. Hence, the only way you're going to be seeing bullish momentum is if we start to crack above, followed by some type of continuation, and you could expect a rally back to the 119. But the big buys, or the longer term buys, won't occur until you're above this region, and more importantly, above, the 124, 125 handle. And so looking at it from a 4-hour time frame perspective, where could we expect price to move within the next 24 to 72 hours? Let's break it down. We do have a sharp impulse here. Then from there, we do go into a nice state of liquidation or relief. News does come out, FOMC, Draghi, and then from there we have more data that occurs here. Now, instead of forming a continuation, we formed a reversal pattern, which now has turned into a state of liquidation or relief. And so looking at it from this perspective as of right now, there are two ways that the sell is going to come about, or the buy. Either A, we're going to break below the 116 to 27, small continuation, and start rallying back to the 115 handle. Or B, this is the impulse. This is going to be treated as relief, and from there we are going to rally back to the weekly resistance and potentially even target the 118.50. Failure to do either, guys, will just warrant range bound, and that is not something that you should be interested in. Safest trades are going to be above the weekly resistance or below the daily support. One thing to factor in, guys, again, is that this is all treated as short term. At the same time, this is all treated as short term unless you're seeing cracks below or above those key areas that we were stating on the daily. So please factor that in. Going to the next chart, USD CAD to start off. On the monthly time frame, guys, we did see a lot of rejection occurring at that 130 handle until about a week and a half ago, in which we did in fact crack above quite hard, telling us that potentially CAD's economics are going to shift or change. So let's take a look at how they started out. We did see a strong impulse followed by a nice state of liquidation, and we saw a continuation of that, and that's what we thought we were in again. However, we are currently breaking above, but please factor in that this breakout can be false, or it can be warranted as a false break. Now, looking at it from a weekly time frame perspective, you can see that there were a lot of pending orders sitting within that 132, 133 region. And so with that, we could expect USD CAD to potentially pull back. And so dependent on how this pullback forms will depend on whether this is a false break or we actually relief for another rally back to the upside. And so looking at it from a daily time frame perspective, we are in a state of liquidation, and more importantly, in the smaller time frames, a reversal pattern after that initial impulse occurs. It makes sense, guys, why this is starting to decelerate or exhaust, right? For two reasons. One, we do have weekly resistance sitting here, so there will be a lot of rejection or pending orders occurring there. It does make sense why. And secondly, with every impulse does come a pullback or state of liquidation. Now, please factor in is that even if this does break out, this is going to be treated as short term, because this could be all just relief or liquidation for one more rally back to the weekly resistance, or potentially even higher. The only way you invalidate this impulse is if you break back below the monthly resistance, stating that that breakout was now false, and then you look for a continuation pattern to run it back down to that weekly ascending trend. Now, those would be daily plays. Looking at it from a 4-hour time frame perspective, like we said, we are in a state of reversal after that initial impulse was made, treating all of this as consolidated relief, but more importantly, notice the behavior. And so two ways are going to come about. Either A, we're going to break above, create a small continuation pattern, and start rallying all the way back to the upside. Or B, we're going to break below the lows, small continuation, and then from there, you're going to expect a push down to that daily ascending trend. Now, factor this in. Even though if it gets the daily ascending trend, this could all be treated as relief or a state of liquidation for another rally back to the upside. The only way this becomes invalid, like we stated on the daily, is if and only if you receive a break back below the monthly resistance, stating that this rally is no longer valid. Looking at USD JPY to start on the monthly time frame, we do have two impulses to take into consideration. First, this one right here, stating all of this is relief or liquidation. At some point, you're expecting structure to start rallying back above and expecting this to kick in. But within that, you can see that we did have this initial rally here, a break of the lows, potentially invalidating this impulse, but we do want to factor in where this impulse started, which was on the break of that previous resistance. Hence, this could just all be liquidation relief for a rally back above. So please keep that in mind. But as of right now, since this is the initial momentum, any bullish trades to the upside will be treated as short-term or higher risk until we have a clear or definitive direction. Looking at it from the daily time frame as of right now, two things to factor in. You are range bound. Secondly, you do have this impulse. Hence, all of this is treated as relief or liquidation. But on top of that, you do have this impulse as well, in which this is all treated as relief or liquidation. So make it simple. Wait for the lows to break or wait for the highs to break. Simple as that. Don't try to overcomplicate it. Don't try to figure out which way it's going to move. If you guys do want to see on smaller time frames which way this should break out, this is simply, there's a shorter term sell, and then you have the longer term sell, and then the longer term buy. Let's start with the longer term buy. The longer term buy's got to start with a strong crack above. First, the weekly descending trend line stating it's invalid, as well as the weekly resistance. Then from there, you want to see continuation, and then you could expect a rally back above. You do not want to trade within there. Now, if that doesn't happen, you have first one sell. That was your impulse. This is all treated as relief. Structural retest to the left. Once this cracks back below, look for a small pullback and then start running that back down to the weekly support. Now, please factor in, look left on the weekly support. If you see here, we had a tremendous amount of pending orders from the buyers. The buyers are still in control because of that initial impulse. And so if we break below these lows, then that states that this impulse is now invalid, and you could expect continuation all the way back down to the 160.60 handle. That's possible. Now, if that doesn't happen, then this is what's going to happen. This will all be treated as relief or a state of liquidation. You're going to expect a rally back to the upside. Those are the three possible ways that I see US dollar Japanese yen playing out as of right now. Pound dollar to start on the monthly time frame, we are starting to see some type of liquidation, deceleration or exhaustion occur, which does make sense. Please factor in pound's economics to start. You do see a sharp impulse followed by a long state of liquidation or relief, another impulse, short-term states of liquidation or relief, but we are stating this is one movement. Within that one movement, what we did state here was that all of this was treated as profit taking or liquidation after that drop, and now we are looking for continuations back down to the lows. But a price cannot move in a straight line shot, right? And more importantly, a trend is not a straight line direction, but rather a consistence of highs and lows. Even though we broke out of the ascending trend, we never broke out of the last higher low of the ascending trend, failing to create lower lows, telling us that momentum potentially could pull back. Now, if you look at it on the weekly and more importantly the daily, you can see that this 130 to 132 handle is very strong from the buyers. Why? Because if you look in the past, this was all sellers territory, which turns into new buying opportunities or buying orders, right? And so you look at it after the impulse, you do see a state of reversal or liquidation. Now, within that, we did see a lot of deceleration occur here, which is what we're going to expect there. And on top of there, we're at a very critical weekly level. Looking at it from the daily time frame, you do see a sharp impulse and then a nice state of liquidation or relief. Within that, we do see another impulse, but be wary, we're not breaking the lows. Yes, this is relief, but you want to sell below the weekly support. Then from there, you're going to look for continuation and then expect to run it all the way back to the downside. But let's take a look in the 4-hour time frame just to look closer to see how we could potentially look for both trades. So looking at what's been occurring on pound dollar as of right now, we can see that we had this huge drop. Nice state of liquidation or relief. Once we broke those lows, you saw continuation back down to the lows. Now we falsely broke those lows. Keep that in mind. 2 weekly supports were falsely breaking. With that, let's take a look at current momentum. Huge impulse. Then from there, we see a state of reversal. From there, the reversal does turn into a sharp bullish trade, but we do go into another state of reversal. Please keep in mind, though, that even though we were breaking out right now, this could turn into just a state of liquidation for one more rally back up and potentially even higher. The only way that this does in fact become a sell, and this is what I was stating, we're going to look on the 1-hour time frame here real quick, is if and only if we do see a clear break below this low. If you do see this break right here, then from there you're going to look to rally first to the weekly support and potentially even lower back down to those previous lows. Because this doesn't break out, that's treated as relief, and you're going to expect to push back to the tops, riding this momentum. Failure to do either, guys, will just warrant consolidation within this. That's not something that you guys should be interested in. AUD USD, guys, on the monthly time frame, we are breaking out of that low. At first, we did state that even though that the momentum was still to the downside and all this was treated as liquidation or relief, last month we failed to break out of that higher low. What I stated before, trend is not a straight line shot, but a consistence of highs and lows. We broke out of the trend, but we never broke out of the last higher low of the ascending, which is why structure started to pull off. Now we are in fact closing below it, which could tell us that, you know what, we could expect continuations down. But please keep in mind that once we did in fact break these lows near here, this is where the main rejection started to come about. And you can see where all the pending orders start to occur. You can see pending orders sitting within here, here, and everywhere around. And it's very choppy between that 74, 73 handle up to the 76, 77. That's how AU has always been. So looking at it, yes, we could be sell bound, but you want to be careful, okay? Now looking at it from a daily time frame perspective, you see a sharp movement. And then from there, we were in a long state of what I thought was reversal. And we were expecting liquidation at some point, which we did get. But we had to see one more impulse first. Then from there, we got the state of liquidation. And so even though, guys, I make these concepts about what I think is going to happen, we trade what we see, not what we think in the end of the day. And so if price doesn't move exactly how I anticipate it, sorry, guys, then simply I'll just go with how momentum is moving. That's the beautiful thing about being a price action trader. We don't have to be set on one principle or one set direction. It's just how momentum's going to push. And so looking at it from a smaller time frame, you see a sharp impulse. Then from there, a nice state of liquidation, another impulse. And so either this is going to break out, tag the weekly, or we're going to liquidate for some time, create a structural retest, and then start dropping. That is very possible. Safest plays are going to be below the lows or above the highs. Looking at it from a 4-hour time frame perspective, we are moving exactly as we anticipated, creating that slow, decelerated, long corrective state. Notice this, okay? So how are we going to play this? We're going to want to see a break below, small pullback, and then from there start to rally that down to the weekly support, stating that this is your momentum you're riding and all of this was relief. The only way that this is going to break out if that was the impulse that rallies. Now, treat as short term, right? Because momentum is still descending. The only way that it's going to become a long term buy, for not long term, but let's say medium length, is if you break above the 74.81 continuation, and then you could run that back here. Once again, all treated as relief for a state of liquidation because momentum is still descending. So you could expect another drop back down unless you saw a strong crack above. Last but not least, guys, NZD USD to start on the monthly time frame. Even though momentum is still siding with the bears, we are range bound, right? And you can see here that the range was created after we created short-term higher highs, warranting that is short-term bullish momentum. Looking at it from the weekly time frame perspective, just like AU, guys, even though we broke out of this trend and that trend and that trend and that trend is not a straight line shot, but a consistence of highs and lows. And so what we are waiting for is the breaks of the highs or the lows. Simple as that. And so the momentum that you're going to be trading within on NU is based off of what's the momentum in the range. Looking at it from a smaller time frame perspective, you can see a sharp drop, a nice state of liquidation, and now continuation. But we're not breaking the lows. And look left, there were a lot of pending orders, which makes sense why we should see pending orders where we currently are sitting. But looking at it from a smaller time frame perspective, on the 4 hour, we can see that we are in fact holding the range. We falsely broke the range last week. Hence, the range is still holding. So two possible ways: sharp impulse, treat it as relief or continue as liquidation. If you didn't get the entry within here, all good. But that was a nice sell. And so now we are seeing continuation. If we see this low broken, small pullback, you could expect a drop. Now, if that doesn't happen, what could happen is structure could simply create that as a trend. It's going to start liquidating, really pulling off, and then from there drop one more. That's possible. That's what potentially we're expecting on a lot of pairs. But make it simple. That's your range. Play the lows, run it down. Play the highs, run it up. Again, the buys are still treated as short-term, a higher risk, could create a structural retest for continuations back down. You want to invalidate the buys by breaking above the consolidation box, stating that impulse is now invalid. And so with that, guys, these are the pairs that I want to review in reference to the $6 pairs, going from the monthly to the smaller time frames, finding how exactly we could enter and exit those positions for the next 24 to 72 hours. Hope you guys enjoyed that, and now I will be taking the questions and answers.